Hello, this is Phil, the Laptop Trader. Welcome back. Here to share my experience and give back to the stock investing and trading community one video at a time. Good luck. My contacts, laptoptraderphil at gmail.com. Caution, protect yourself at all times. Most stock traders lose money. Please seek qualified help if you need investing. Where to start? Well, let's start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. This is our January 2024 agenda for our main market update video. We're going to go over just a quick 2024 market outlook, some current market conditions, a quick review of some technical analysis concepts, how to read a price, candle, or bar, um, one or two trades to consider for this month, and then I picked out 4 stocks I believe will perform for 2024. Again, this is kind of my basis for entering a trade or exiting a trade. I use the 4 market stages of price action. I'll explain that a little more to you. There's different names for the 4 stages, such as accumulation, greed, fear, distribution, consolidation, plateau, a peak, a trough. So you'll hear these different terms used in the media. There's really only 3 price trends within these market stages. The stock can go sideways, be in an uptrend, or it can be in a downtrend. This is just kind of a quick picture of maybe what you can do within these different stages, kind of where to buy and sell. You know, where you could buy, you could hold for gains, sell for profits. You can start selling options at different levels. And then, of course, if the cycle starts over, then you can adjust your strategies for the different trends and different cycles. This is just a quick updated picture I made of how to read a pricing candle, including what the body means, the range of the candle, including the tail or the wick of the tail or the bar, where they open, where they close. So that's just something I made. It'll hopefully help you guys out. This is last year's diagram. I didn't know if that was quite clear enough for some people, but it's the same thing. And these bars or candles can form in any different number of ways, which also communicates to us sometimes the emotion of the market. This is the main buy setup that I use. I updated this slide for you to hopefully help explain what I'm really looking for when I enter a trade on a buy setup. It needs to be in an uptrending stock. The location matters. Essentially, you're going to enter over bar 2, stop loss under bar 2, or enter over bar 3, stop loss under bar 2. And we're essentially looking for at least a 2-to-1 reward to risk for our money. This setup works on any time frame being traded. So you're going to share size based on a stop loss. This is just a quick diagram of what is a pivot. This works best on the daily time frame. It also works on any time frame, but I think the 3 bars to the left or right works the best on the daily time frame. Just some basic rules to limit risk up front. Your account size does not matter. Just remember you can't lose what you don't risk. So have a trading plan with some specific things that you like to look for, both positive and negative. Limit your overall position size to a percentage or dollar amount of your account. This I call my catastrophic loss or my gap loss rule. Stocks do gap up or down. Then finally, further limit your risk using a stop loss rule if you choose to do so. So to share size, if you had a $2 stop loss on a trade and you had an overall risk of $10, you could buy 5 shares. So it's pretty simple math on that one. This is just a further diagram of that, or a picture of that stop loss rule. So if you were to enter on this chart as a breakout trade, enter on that large green bar over the resistance area or over the ceiling, calculate your risk based on a stop loss under that large green bar. Let's say it was $2. The share size you would just simply take as an example. If you had $20 of risk divided by a $2 stop loss, you could buy 10 shares. And then you're looking to get some sort of a reward for your risk. So in this case, let's say we want at least a 2-to-1 reward, we would need a $4 move in that stock price. So pretty basic to understand. Again, I would encourage you to create and use a pre-trade checklist. I do. I've shared it with you guys in other videos. I'm not going to go into that right now. But your trade checklist just instructs you where and when to enter or exit using trends, stages, clues, and bar by bar analysis. So I don't have time on this video for that, but just come up with some basic things that make sense to you. And then before you take a trade, just check the boxes and either come up with a yes or a no on that trade. So let's look at some charts. Get our brains working and practice looking at price for our stock or market ETF selection. If we're going to rely on technical analysis, we need to practice and get good at finding the best chart pattern that matches our bias in our trading plan or strategy. Good luck. So here, as we review the markets, we're going to be looking at some monthly charts. These charts go back, each bar is a month worth of price, going back 5 years. So just to give you an overall, kind of a picture if you were in an airplane flying over the market. So this is one of the main ETFs or markets that I use, the S&P 500 ETF, symbol SPY. It represents about 1/10 of the value of the index. And it's very helpful to kind of gauge what's going on with the overall market. So just looking over the chart, we can see I've just put in some symbols like C is for ceiling or resistance. So you can see there was a ceiling here, okay? And then that became a floor later on under these bars. F is for floor, C is for ceiling. This was the COVID low, right? That spike down was a COVID low. Then we kind of plateaued up here. We created some resistance. We then had the 2022 bear market. We then had kind of a little upturn, and we had a 7-month consolidation right through here, which this created the ceiling over this area around the 390, 400 level. We then had this month broke out. So we broke out of this consolidation on that bar, went up, pulled back to that bar, which created the floor, which used to be the ceiling. We then can see we formed this 3-bar turn here on a monthly chart, and since then have broken out. We're currently at or near resistance here, which matches the resistance over here. So my bias on the overall market going forward for 24 is going to be up and maybe sideways at some point during the year. But this is, we had a real strong November, December. January looks like that's going to at least continue or go sideways. So I would say overall market, the S&P 500 looks to be, I would say, bullish. NASDAQ represents 100 stocks that are more technology based. Again, we have this long rounded support here on the bottom. We had a resistance area. We had this buy setup 3-bar turn here back in late 2023 and into November, December. And then here we've actually broken out over this line of this resistance. So we've kind of broken out on NASDAQ. I would say this is more bullish than the S&P 500. So that looks to be going in a positive direction for 2024. This is a more broad-based representation of about 2,000 stocks. It's called the Russell 2000 ETF, symbol IWM. So we had a ceiling over here. We had this V bottom for COVID. We had a breakout over that ceiling. Then we had this resistance level. And then we had the 2022 sell-off. And for whatever reason, these smaller companies and mid-sized companies just didn't have that upswing in 2023. So we're in a range of price right here, back and forth, back and forth. So the big question mark is for 2024 is, will this break out of that range and go higher, or will it continue on and continue on with this range? Well, that's a question that needs to be answered, not by me, but by the market. So if it breaks out of this range, I would expect most stocks to participate and go higher. If it just stays in the range, then that would be more of a symptom of a weaker economic environment or just a weaker stock market overall. So that's a question mark on the Russell 2000. Now, the Dow Industrials only represent 30 major companies, but they have been in a pretty much the sideways trend here for the last year. We do have kind of this 3-bar turn and a breakout over this ceiling or over this resistance. It just made a new high in January, so we had a strong November, a strong December, and now it looks like a continuation higher in January. So I'm very bullish on the Dow Industrial stocks. That's symbol DIA. That's another major index that I follow. So again, here you had some support or the floor, resistance, resistance, and here you have a ceiling. So we've broken out of this ceiling and this ceiling here. So that looks higher from a technical perspective. This is just an index that I watch. It's called the Volatility Index, or symbol VIX, V-I-X. It kind of represents fear and uncertainty overall. Individual companies will also have their own volatility, but this is just a general overall view. It represents pretty much the S&P 500, but you can see here 85 was an extreme during COVID. Back during 2008, there was also an extreme spike in the VIX, but pretty much 2023 has been a lower volatility year than 2022. And I think that's part of the reason why we saw the market go up in 23. So right now, January, we're closed at 12.7. That's very low. Anything under roughly 20 is considered kind of in the low range. Anything over that, you can see 30 to 40 would be considered high volatility. It's just a range from 0 to 100, so it's not a big deal, but it's just something to consider. So right now, we don't really have fear and uncertainty. We have more bullishness overall, more positivity. So now that's subject to news, subject to other events like interest rates going up or something like that, or a recession. So, but right now the stock market is in a low fear environment. This is just another one that I watch. It covers the S&P mid cap companies, 400 companies, symbol MDY. This has been in a range for a long time, and this would be more of a question mark to me. If it can break out of that range, yeah, I would expect it to go higher. If it doesn't break out of the range, then more of the same. So that just represents mid-cap companies. This is the small cap ETF I follow, symbol SPSM. We just had, this has also been in a range back and forth. You can see the ceiling on the floor, ceiling the floor. We just had a little bit of a breakout here in December over the ceiling right here. So will that continue or not? We'll come to find out. But both of these mid cap and small cap ETFs closely follow that Russell 2000. So any of those three will help you kind of gauge what's going on with smaller and mid-sized companies. Now I'm going to go into what is probably the most widely followed sectors. There's, I believe, 12 of them. So in our top-down approach, we're going to go from the overall market down to these sectors that I follow. So within these sectors, most companies will follow what's going on with this overall sector. And there's also subsectors or industries within these sectors. So let's just take a look here at symbol XLE for energy. In 2022, it outperformed, plateaued, and did not have a good 23. This is a very neutral looking chart to me, very sideways. So big question mark, will it go up, will it go down, or will it continue sideways? I would say under 76, it's probably going to go down. Over 92, could have a higher year in energy, but right now neutral in my opinion. Financials, looking out to 24, it had a sideways trend range for the last year, and now it's got kind of this little buy setup breakout here. Starting again, this was November, December, now January looks higher. So I would expect financials to continue to perform as long as earnings come in as expected or better than expected. We're going to be entering, I think, bank earnings season or financial earnings season here coming up. So that will be a big what if, you know. So big question mark as to what happens with earnings and these financial companies. But right now it looks kind of bullish to me. Consumer discretionary has been, I would say, kind of a back and forth year until recently. Kind of broke out, pulled back, and then kind of gave us this little buy setup here on a monthly basis and created this higher low versus this area. So I like consumer discretionary for 2024 as the consumer is one of the driving forces of our economy. And the other thing I like about this chart is the fact that the high was 215. We're currently at just under 174. So there is room to move up into this previous high for consumer discretionary. So I like that sector and companies within that sector. Retail, S&P retail. Right now we had, you can see back here we had a plateau, a 1-year plateau, and then it came down with the stock, the bear market, and now we've been in a range for 21 months in retail. So I really don't have a bias on retail, a directional bias, but that looks like that may just continue to be in a range. Now the interesting thing about that is there is companies within retail that are doing pretty good. I'll show you that later. Healthcare, XLV symbol. This has also been in a long range for a long time, 2 years. This has also been in a range. Had a nice November, December. It looks like a continuation in January to go higher. So I do like healthcare for 24. I would not get overexposed to it, but healthcare has just kind of been flat for 2 years. It's maybe some of the companies within healthcare can start to outperform. So that's kind of one area maybe to keep an eye on as far as maybe neutral to bullish for healthcare or healthcare companies. Technology has led the way down, but it's also led the way back up. You can see kind of this sell off, rounded bottom area. Then we made a higher low, kind of this 3-bar turn. And then over 178, I was bullish. We're currently at 192.25. So overall, technology has led the way and looks like it will continue to do so. Utilities have been in a downtrend since September of 22. We have no new higher lows or higher highs on this chart for utilities, so that has been in a bear market and continues to do so until proven otherwise. One positive on utilities is we have a spike in volume and a bottoming tail candle or a bottoming tail bar here in, I believe that was October of 23. But it really hasn't had a lot of follow through to that, so that is a watch and wait for utilities. Now this sector, this XLI or industrial sector, is closely related to the Dow Jones, the 30 companies in the Dow Jones. However, this ETF has 82 companies within it. Most of these companies, you would recognize their names if you look up the holdings of XLI. You will recognize most of the companies within this. So I really like this ETF as far as its diversity. It's been a sideways range for 2 years and 8 months. And even within that, in the last 12 months, it's kind of been sideways. Now, recently in December, we just broke out to a new high. So I think that's very positive for industrial companies overall. So I do like industrials for 2024, as they have really not done much in the last 2+ years. So that's an interesting place to go shopping for companies, the XLI. As far as another sector, the materials sector, symbol XLB, it's kind of also had this rounded top into bear market, and now we've been in a range for quite a while. So as far as materials companies go, that's a big question mark. Will they break out or will they just continue sideways? You can see these trends can last for quite some time. So materials, just a one to watch. And then we've got one of the leaders of the market, along with technology, is the communication sector. This chart's kind of interesting because it gives us a little bit different pattern where we had an uptrend, downtrend, and then an uptrend. So this is kind of like if this was a zero line, and this would be like 100% move up, and then it came all the way back down to zero, and then it moved right. It's moving right back up. So very interesting how this this sector has that volatility in it. Even though something like, I believe Facebook or Meta is the leader in this sector, that's really a driving force. Is that just a few communications companies driving that? I think that's why you see that volatility. But my bias to this would be to continue higher up to probably $100, give or take, on that overall sector, and then companies within that should outperform. Then we have consumer staples, which is stuff that consumers buy on a regular basis or need. Symbol XLP. This has been kind of relatively weak since April of 22, so that's a long time. It's kind of in this range, almost a slightly downtrending range, and even made a new lower low in October. So this is a big question mark. Can this turn back up or will it not? Now, some of these companies within this sector have sold off so much, they're actually pretty good value. I'm thinking of companies like Hershey's and Mondelez and General Mills, just think of big food companies and other large companies like that. So it's an interesting sector to watch right now because there could be some real good value within that sector. But as far as overall, it looks pretty weak. Now, real estate, this is another interesting sector because real estate has been in a bear market since January of 22. Recently, it's had a nice turn up. It put in a little bit higher low, but can it continue? Can it follow through to the upside? If it can, I think that'd be very good for the economy, as real estate is a large part. Another interesting thing about these sectors is that, like I said, underneath of those sectors are subsectors or industries. And here's an example of where real estate's been in a bear market or a downtrend. Meanwhile, home builders have been in a bull market since January of 2023. So that's kind of an interesting anomaly that while real estate's down, the actual home builders or public home builders are up. I think you can see that trend should probably continue. Just made a new high in December, and that looks like a continuation pattern higher for home builders. Other thing that I like to watch is just general market interest rates. This is just a chart of the 10-year Treasury note, symbol TNX. We can see over the last few months, as the interest rates have come down, right, since October, November, December, as interest rates have come down, markets have went up. So that's kind of an inverse relationship. If these interest rates go back up, I think you'll see the market go down. If these interest rates maintain course and either go sideways or come down some more, that will be a very bullish factor for markets overall, as interest rates affect anybody or any company that's using credit. So that's very important. Here's another interesting thing, that within retail, um, that has not had a great year or two, but within retail, TJX has had a very nice year and a half. So that's an interesting anomaly too, where while retail suffered, TJX has outperformed. So it's important to kind of keep an eye on what's going on within these sectors also. Just create a watch list and start watching some of this stuff, and you'll pick up on these things. So that's one of mine. One of my top four, I think, should continue to outperform. TJX company. Netflix, I believe, will continue to outperform in 24. It's come all the way up into this large bearish candle. The top of that candle is like $600. So right now we're at 492.16 in Netflix. I think Netflix can get up to the top of that candle as far as a long-term view. So I like Netflix for 2024. Again, here's another picture of a large food company, large consumer staple company, Hershey's Foods. Had a real bad sell-off here, 6-7 month sell-off in 2023, along with many other food companies. I believe that was interest rate pressure, and as the stuff that they were probably buying for their foods or the ingredients were probably getting more and more expensive. And if they had to use credit, that affected their business. So I think that's what you're seeing here. You're possibly seeing a bottom in Hershey's and other companies within the sector. If that can turn up, I like some of these large consumer staple food companies. So that's another one to watch for 2024. Spotify, I feel they're doing a better job than their competitors as far as streaming and podcasts and music. I personally like it better than like Pandora and iHeart. Again, that's just an opinion, but the chart looks very nice in Spotify. It's come up from I think it was like 60 or $70. It's now up to 203. So this has had a real nice run, and I think it will continue to do so. So I hope that helps you guys out. That is all for January, and thanks for watching. Please like, subscribe, and share with others, and drive safe. Don't forget to share size your trades and do your homework on your investments and your trades. Good luck. That's the Laptop Trader. See you next month.